In this video, I'm going to go over all 78 stocks that pay monthly dividends to shareholders. My goal for this video is that it'll serve as a really good resource for people who are looking for monthly paying dividend investments, because after all, that's the most ideal payment frequency for those who want to live off dividends. It's been 2 years since I've updated this list, but this year I decided to include Canadian stocks as well that are listed on both the TSX and American exchanges, or they can be bought in the over-the-counter markets. If a stock has 5 letters in its ticker symbol, then that's a good sign that it's either Canadian or it is American and it's just a very thinly traded company that's not on any major exchange right now. Before we get started, I need to give a couple disclaimers. This video is not intended to serve as your only source of research. I won't be doing too deep of a dive into any particular stock in this video. The amount of time it would have taken to do an in-depth analysis on all 78 companies would have been pretty time intensive. So with that being said, this is strictly for informational purposes. You need to do your own research on whether a company mentioned here is a good investment for you and if it fits with your investing strategy. I have made in-depth videos on many of the companies I'll mention, so feel free to search my channel for a specific company name if you're interested. Second, this list only includes individual stocks. It does not include ETFs, closed-end funds, or CLO funds. In the previous version of this video that I made, I got a lot of comments from people saying that I missed an investment, or they'll say, you forgot to include this company. But if you check their website, it'll tell you that they're either an ETF or some other kind of fund. There's currently over 4,500 monthly paying ETFs and other investment types out there. Many of them are very similar to one another in terms of what they hold, and just like my first point, including these would have taken way too much time for one video. Finally, one last thing, if you appreciate this resource, then please give it a thumbs up and subscribe if you want more content like this. Putting this together was a huge undertaking, and I hope it'll serve as a good resource for people who are looking for some monthly paying dividend stocks. My channel focuses specifically on high-yield dividend investing, also known as income investing, where I show you that you don't need as much money to retire off dividends as you think you might need. So if you're into that kind of content, please consider subscribing for more. Also, the stocks appear in alphabetical order based on their ticker symbols in this video. So with that being said, let's go ahead and get started. Agree Realty Corporation, ticker ADC, describes themselves as a real estate investment trust that's rethinking retail through the acquisition and development of properties net leased to industry-leading, omni-channel retail tenants. Agree Realty leverages their 3 distinct investment platforms to target industry-leading retailers in e-commerce and recession-resistant sectors. Having been founded in 1971, the company became a REIT in 1994 and today are one of the largest equity REITs. In 2021, this company made the excellent decision to start paying monthly dividends. As of the making of this video, this company owns and operates a portfolio of 2,271 properties that are located in 49 states and contain approximately 47 million square feet of gross leasable space. Some of their largest tenants would include Walmart, Dollar General, and Tractor Supply Company. AGNC Investment Corporation, ticker AGNC, is a mortgage REIT that invests in residential mortgage pass-through securities and collateralized mortgage obligations for which the principal and interest payments are guaranteed by U.S. government state-sponsored enterprises. The company funds its investments primarily through collateralized borrowings that are structured as repurchase agreements. They describe themselves as an internally managed mortgage REIT that's built with the objective of generating favorable long-term stockholder returns with a substantial yield component through levered investments in agency residential mortgage-backed securities. AGNC is currently the second largest publicly traded MREIT in existence. As of November of 2024, they had an agency portfolio value of roughly $73.1 billion, which is largely made up of 30-year fixed investments and to a lesser extent 20-year fixed, collateralized mortgage obligations and non-agency mortgage-backed securities. Atrium Mortgage Investment Corporation, ticker AMIVF, is a non-bank lender that provides residential and commercial mortgage services in Canada. The company offers various types of mortgage loans, such as land and development financing, construction and mezzanine financing, and commercial term and bridge financing services for residential, multi-residential, and commercial real estate properties. They're not a mortgage REIT, but rather a non-bank lender offering mortgages for commercial and residential properties throughout Canada. Their mortgage portfolio is comprised of loans generally ranging from $300,000 to $30 million and is secured by real estate in major Canadian urban centers. Atrium's mortgage portfolio is over $875 million, with dividends paid monthly, plus a special dividend once a year. The average mortgage term Atrium provides is 24 months, and over 89.3% of their portfolio is priced based upon floating rate loans. The weighted average term remaining on their loans is approximately 10.5 months, and their average loan size is 3.7 million Canadian dollars. APLE Hospitality REIT, ticker APLE, owns one of the largest and most diverse portfolios of upscale, room-focused hotels in the United States. Apple Hospitality's portfolio consists of 223 hotels with approximately 30,000 guest rooms that are located in 86 markets throughout 37 states. Concentrated with industry-leading brands, this company's hotel portfolio consists of 99 Marriott-branded hotels, 120 Hilton-branded hotels, and 5 Hyatt-branded hotels. Founded in 2007, the stock has been paying monthly dividends since their IPO in 2015. Apple Hospitality did suffer pretty significantly during the pandemic. With lockdowns going on, this company saw major losses in their business, which resulted in them having to stop paying their regular monthly dividend for 2 years. They have since resumed paying their monthly dividend, but it's still not nearly as much as it used to be before the pandemic. Although it's a smaller REIT, they do own hotel properties that are occupied by some of the most well-known brands in the sector. ARMOR Residential REIT, ticker ARR, is a stupid mortgage REIT that invests in residential mortgage-backed securities in the United States. Their awful securities portfolio primarily consists of the United States government-sponsored entities, or GSEs, and government national mortgage administrations issued or guaranteed securities. Their terrible investments are backed by fixed-rate, hybrid adjustable-rate, and adjustable-rate home loans, as well as unsecured notes and bonds issued by the GSE and the government states' treasuries. They've existed since 2008, although they should have given up a long time ago. This embarrassment of a company started paying monthly dividends back in 2011. Although ARR currently offers a dividend yield of over 16% according to Google, this chart is the only thing that I need to show you. This company has lost over 95% of its value since their IPO. Originally paying $4.80 per share in dividends a month, their stock now pays just 24 cents a month, which is a 91% decrease. Despite the extremely large dividend yield, you would have lost money on practically any investment in this stock at any time in its history, regardless if you reinvested the dividends or not. Just don't even consider this company. A&W Revenue Royalties, ticker AWRRF, is a stock that's currently going through some major changes. It was originally a trust that holds A&W fast food restaurants, but appears that they're in the process right now of merging. I'm not entirely sure what the end result of this is going to be based upon my research, but right now they currently own 1,000 restaurants in Canada and they have over 1.7 billion Canadian dollars in sales. According to the trust, A&W is the second most popular quick-service restaurant in Canada and the #1 seller of root beer in the country. The majority of their locations are in Ontario, Calgary, and British Columbia. Although A&W has been around for over 65 years, this trust was founded back in 2001. As time goes on, things have continued to trend upward for this trust, as the number of locations they own have continued to grow every year since their inception. The number of A&W locations they own have almost doubled since 2002. Their gross sales reported have also continued to grow almost every year with the exception of 2020. Banco Bradesco, sorry for my mispronunciation, ticker BBD, together with their subsidiaries, provide various banking products and services to individuals, corporations, and businesses in Brazil and internationally. This company operates through two segments, which are banking and insurance. They provide savings, checking, and salary accounts, real estate credit, vehicle financing, payroll loans, mortgage loans, leasing, and personal credit. Additionally, they provide cash management and foreign trade and exchange services. Their stock trades on the New York Stock Exchange, and they've paid a monthly dividend since they started issuing dividends in 2004. As of the making of this video, this bank is currently the largest in Brazil and the third largest bank in Latin America. You can see by their corporate profile they currently have 72.9 million clients and they have over 7,400 branches located throughout Latin America. They were founded back in 1943 and have a long history of acquiring other companies to expand their operations. Diversified Royalty Corporation, ticker BEVFF, is a Canadian royalty company located in Vancouver, British Columbia. This company engages in the acquisition of royalties from multi-locational businesses and franchises in North America. It's a bit different of a company compared to what we normally see here in the States, and I'm not too familiar with this type of business. It basically looks like a holding company, almost like Berkshire Hathaway. According to their website, Diversified Royalty Corporation currently owns Oxford Learning, which is a tutoring service. They also own Sutton Group, which is a real estate company, Mr. Lube, a chain of automotive service centers, Mr. Mike's Steakhouses, among several other companies. Diversified Royalty Corp owns such a wider range of different businesses in different sectors that doing a really in-depth analysis on each one would be really difficult to achieve, just like Icon Enterprises. Overall, they've been doing well for the past decade, though. Boston Pizza Royalties, ticker BPZZF, operates as a limited-purpose, open-ended trust. This company owns trademarks used by Boston Pizza International and operates/franchises Boston Pizza restaurants. Boston Pizza is a Canadian company with hundreds of local franchise owners operating more dining rooms, sports bars, and patios than any other single restaurant brand in Canada. Their stock has been paying monthly dividends since their IPO over 2 decades ago. As of 2024, it appears this investment has 372 locations according to their latest investment booklet. It appears that here in the States, this stock is very thinly traded, which is something you'll want to keep in mind if you do decide to invest in any of these Canadian companies. If you buy a lot of shares in a thinly traded stock, it can take a long time to sell them all if you need the cash. Bridgemark Real Estate Services, ticker BREUF, provides various services to residential real estate brokers and realtors in Canada. It offers information, tools, and services that assist its customers in the delivery of real estate services. The company owns several different real estate brands located in Canada. The company was formerly known as Brookfield Real Estate Services Inc. and changed their name to Bridgemark Real Estate Services in May of 2019. One of their websites almost looks like the American equivalent of Zillow in that it has a lot of property listings throughout the country. All 3 of their businesses have realtors and brokers who assist customers in finding homes. Bridgemark's underlying business consists of purchasing long-term royalty contracts in the real estate services industry. Additionally, Bridgemark seeks to grow the number of realtors in its network organically through recruitment and minimizing the attrition of agents. BSR Real Estate Investment Trust, ticker BSRTF, is a Canadian REIT. They describe themselves as a leading owner and operator of multifamily communities in the Sunbelt region of the United States. The mission of BSR, according to their website, is to provide an exceptional living experience for residents at a community they're proud to call home while creating value for their shareholders through strength, profitability, and growth. Currently, this REIT owns 32 apartments in Texas, Oklahoma, and Arkansas, totaling 8,900 units. The Sunbelt does offer a lot of attractive features that make this an appealing investment. It's been a popular destination for people relocating to a more affordable part of the country. It has a very high insider ownership, with the board owning roughly 40% of all outstanding shares. They report they've also been able to grow their rent at a much faster rate compared to other apartment REITs. BSR's been paying a monthly distribution since their IPO back in 2018. Canadian Apartment Properties Real Estate Investment Trust, ticker CDPYF, is Canada's largest publicly traded provider of rental housing. They own approximately 63,500 residential apartment suites, townhomes, and manufactured home community sites that are well located across Canada and the Netherlands, with approximately $16.9 billion worth of investment properties in Canada and Europe. They're also one of the oldest apartment REITs in Canada, having been founded over 25 years ago. Their stock has been paying monthly dividends since at least the 90s. CAPREIT also boasts some pretty impressive metrics, having a really high occupancy rating of almost 99% across their 63,000 plus residential units. They aim to have a very conservative FFO payout ratio, with it usually falling between 50 and 60%. From a share price perspective, their stock has performed pretty well over the long term. Chemtrade Logistics, ticker CGIFF, offers industrial chemicals and services in Canada, the US, and South America. It operates through 2 segments, which are sulfur and water chemicals and electrochemicals. The SWC segment markets, removes, and/or produces merchant, regenerated, and ultra-pure sulfuric acid. They also market sodium hydrosulfite, electrical sulfite, liquid sulfur dioxide, and hydrogen sulfide. Their EC segment manufactures and markets sodium chloride products, including chlorine and hydrochloric acid for their pulp and paper, oil and gas, and water treatment industries. They're a Toronto-based company, having been founded in 2001. As you can see, they have a pretty extensive product portfolio that spans a lot of different industries and sectors. They have a significant regional market share across products including sulfuric acid, ultra-pure sulfuric acid, sodium chloride, and water chemicals. There aren't too many chemical companies on this list, so if you're familiar with this industry and you're bullish on it, then it might be worthy of consideration. Chesswood Group Limited, ticker CHWWF, is a financial services company that operates primarily in the specialty finance industry. The company offers micro and small ticket commercial equipment financing to small and medium-sized businesses through a network of equipment finance broker firms and equipment vendors in the US. They also provide the same service to small and medium-sized businesses located in Canada. Additionally, the company provides home improvement and other consumer financing solutions, and they were founded back in 1982. Chesswood's operators have a long-standing history of providing asset-based lending services across a wide range of specialty finance verticals, including commercial equipment, small business working capital, consumer automotive, and consumer home improvement. They own a bunch of different finance companies located throughout Canada and the US, including Pawnee Leasing Corporation, Tandem Finance, Blue Chip Leasing Corporation, and so on. All of these businesses help companies buy large assets that they need to conduct their daily businesses, like cranes and various construction vehicles. Cross Timbers Royalty Trust, ticker CRT, operates as an express trust in the United States. It holds 90% net profit interest in certain producing and non-producing royalty and overriding royalty interest properties in Texas, Oklahoma, and New Mexico, and 75% net profits working interest in 4 properties in Texas and 3 properties in Oklahoma. Cross Timbers Royalty Trust was founded back in 1991 and they're based out of Dallas, Texas. This is going to be one of several companies on this list that are structured as energy royalty trusts. There's probably about a dozen or so of them on this list, and it's going to honestly be hard to compare one from another. But one thing that you have to keep in mind is the amount of dividends that a royalty trust pays is all tied to the performance of oil. As you can see, the amount of dividends that you'd receive each month can swing pretty substantially, which is something you'll want to keep in mind if you're looking for a more consistent monthly dividend. These are not the kind of holdings that you would want to buy and rely on for your dividend income. Rather, they can be extremely profitable, but only when oil prices are high. CT Real Estate Investment Trust, ticker CTRRF, is an unincorporated closed-end real estate investment trust formed to own income-producing commercial properties located primarily in Canada. According to their website, its portfolio is comprised of over 370 properties totaling more than 30 million square feet. CT owns a Canada-wide portfolio of high-quality assets that are leased primarily to Canadian Tire Corporation, with annual rental growth built into long-term leases. Located in every province and 2 territories, CT REIT's properties are situated in highly desirable retail locations. Many are conveniently located near high traffic routes, highly visible from the street, easy to access, and have ample parking. In addition, the properties are geographically diverse, with more than 2/3 of CT REIT's rent coming from properties in large urban markets. SmartCentres Real Estate Investment Trust, ticker CWYUF, is one of Canada's largest fully integrated REITs. According to their website, it says, with a best-in-class and growing mixed-use portfolio featuring 195 strategically located properties in communities across the country, SmartCentres has approximately $12 billion in assets and owns 35 million square feet of income-producing value-oriented retail. They also own what they describe as first-in-class office properties. According to their website, it says approximately 98.5% of their real estate is in place and committed occupancy on 3,500 acres of limited land across Canada. Their current largest tenant is Walmart, who make up 23% of their revenue. It looks like they target anchored stores mostly, but they hold a lot of different property types. SmartCentres is a pretty small REIT and a pretty slow grower, but it does offer a 7.5% dividend yield according to Seeking Alpha. Dream Office Real Estate Investment Trust, ticker DRETF, is a Canadian REIT that trades in the over-the-counter markets here in the US. They own and operate a portfolio of upscale office buildings that are located throughout Toronto, Calgary, Ottawa, Saskatchewan, and Gatineau. Canada is currently facing a very similar situation that the US is in terms of their commercial real estate market, specifically with office buildings. On their website, they're highlighting their real estate in Toronto, which, as of their latest reporting, consists of 27 properties and 5.1 million square feet of leasable area. Occupancy for this REIT remains low at 84.5%, but if you happen to be looking for a Canadian office REIT, this one might be worthy of consideration. Dream Industrial Real Estate Investment Trust, ticker DREUF, is another Canadian REIT that trades in the over-the-counter markets here in the US. This one is also owned by the Canadian company Dream. Dream Industrial owns and operates a diversified portfolio of high-quality industrial real estate throughout Canada, the US, as well as Europe. It's a much bigger REIT than Dream Office is, as they currently have 338 assets totaling approximately 71.9 million square feet of gross leasable area in key markets across Canada, Europe, and the US. Just like with the other Dream REIT we just looked at, this stock is also thinly traded, which is something you'll want to keep in mind. Right now it currently offers a dividend yield of around 5.6%. Dynex Capital, ticker symbol DX, is a mortgage real estate investment trust. This company invests in mortgage-backed securities, or MBSs, here in the United States. Dynex invests in agency and non-agency MBSs, consisting of residential MBSs and commercial MBSs. Agency MBSs have a guarantee of principal payment by an agency of the U.S. government or a U.S. government-sponsored entity, such as Fannie Mae or Freddie Mac. They're one of the oldest mortgage REITs still out there, having been founded back in 1987. Almost everything in their mortgage portfolio is made up of these agency residential mortgage-backed securities, and only a tiny bit being commercial mortgage-backed securities. They're in a pretty similar business to AGNC, which we've already looked at. But unfortunately for the longest time, their book value has been on a downward trend. But just recently, this company did increase their dividend, making it the first time they've grown it in more than 12 years. Today, their stock pays 15 cents per share per month. Ellington Financial, ticker symbol EFC, is another MREIT that acquires and manages mortgage-related, consumer-related, corporate-related, and other financial assets here in the U.S. The company acquires and manages residential mortgage-backed securities, or RMBSs, and it also holds collateralized loan obligations, and also mortgage-related and non-mortgage-related derivatives. In addition, this company offers consumer loans and asset-backed securities that are backed by consumer and commercial assets. As of their last reporting, Ellington Financial has over $13.7 billion worth of assets under management, which focuses on high-yielding, short-duration loans. Their stock currently offers investors an 11.48% dividend yield, and it pays 13 cents per month. Their dividend payments aren't as consistent as other MREITs, as you can see. They did take a major beating during the pandemic, but they have almost fully recovered since then. Ellington Credit, ticker EARN, used to be known as Ellington Residential Mortgage REIT. However, this company is currently going through a massive transformation process where they're completely changing their investment portfolio. Formerly a mortgage REIT, Ellington Credit is now getting rid of all their MBSs, and they're now going to own CLOs, or collateralized loan obligations. Their website says they should finish this transformation sometime later this year. Needless to say, because they're going through such a major change, we don't yet know what to expect from this company. As you can probably tell, the same company that owns Ellington Credit also owns Ellington Financial. At this point, there's really not a whole lot that I can say until they finish going through this transformation, so I'm just going to move on. Exchange Income Corporation, ticker EIFZF, is a Canadian aerospace company that trades in the over-the-counter markets here in the US. This company operates through two different segments, which are aerospace and aviation and manufacturing. Their aerospace segment provides airline and charter services and emergency medical transportation services to rural communities throughout Canada. Their manufacturing segment manufactures window wall systems used in a wide variety of construction projects. This company definitely stands out from the others on this list, which I'm sure you've probably realized at this point that the vast majority of companies that pay a monthly dividend are either finance, real estate, or energy related. It's somewhat of a thinly traded stock, which is something you'll want to keep in mind if you are considering investing in them. But they've been paying a monthly dividend for more than 15 years and counting, and they currently offer a dividend yield of 4.63% according to Seeking Alpha's information. EPR Properties, ticker symbol EPR, is a specialty REIT that describes itself as being an experiential real estate company. What that basically means is EPR Properties invests in real estate that provide entertainment to consumers. So they own Topgolf driving ranges, movie theaters, ski resorts, lodging with indoor water parks, among other types of entertainment venues. On top of that, they also hold private schools and early childhood education centers for some reason. According to their website, they have over $6.9 billion in total investments and have 352 properties. This company suffered pretty significantly during the pandemic and the subsequent lockdown. EPR actually stopped paying a dividend for 15 months due to a lot of financial strain, but they've since reinstated their dividend. They currently pay investors 28.5 cents per share each month, which is 9 cents lower than what they used to pay in a pre-pandemic world. You can see that basically whenever we go through a serious economic turndown like the financial crisis and COVID, EPR has been forced to cut their dividend. These experiential REITs can be really good investments when times are good, but they can also buckle pretty hard when the economy gets rough. Right now, EPR currently offers a yield of 7.52%. Extendicare, ticker EXETF, is a Canadian healthcare company. They're a leading provider of care and services for seniors across Canada, operating under the Extendicare, ParaMed, Extendicare Assist, and SGP Purchasing Partner Network. These brands offer long-term care services and home health care services such as nursing care, occupational physical, and speech therapy. Their main bread and butter appears to be retirement residencies and long-term care facilities in Canada. Having been founded back in 1968, in 2006 this company decided to become a REIT. According to Seeking Alpha, they've been paying monthly dividends since 2006, and right now their stock offers a 4.5% dividend yield. First National Financial Corporation, ticker FNLIF, originates, underwrites, and services commercial and residential mortgages in Canada. It operates in two segments, residential and commercial segments. This company offers single-family and multi-unit residential and commercial mortgages. It provides the service through mortgage broker distribution channels as well as online. The company was founded in 1988 and it's headquartered in Toronto. In 2023, they serviced more than 318,000 customers and either made or renewed mortgage loans totaling more than 24 billion Canadian dollars. They've been issuing monthly dividends since 2006 and have a pretty good distribution history. On top of paying some generous special dividends, they've also been able to grow their distributions a few times. It's an economically sensitive company that can suffer during recessions, which is something that you'll want to keep in mind if you're interested in a company like this. Freehold Royalties, ticker FRHLF, is a Canadian oil and gas production company located in Calgary. Freehold Properties engages in the acquiring and managing of royalty interests in the crude oil, natural gas liquids, and potash properties in Western Canada and the United States. This company pays dividends from a high netback portfolio of mineral titles and royalties on oil and gas properties across North America. According to their website, they control 6.2 million gross acres in Canada and 1.1 million gross drilling acres across the US. They have been paying monthly since 1998, and it has a pretty consistent track record. FRHLF currently offers a yield of 7.7%. Firm Capital Property Trust, ticker FRMUF, operates as a boutique real estate and financial services private equity investment company. They deploy capital opportunistically between debt and private equity in Canadian real estate private and public markets. They have a lot of stuff going on, including mortgage servicing, private equity transactions, and property management services, among many other things. They also appear to own a couple real estate investment trusts. They've been paying monthly dividends since 2013, and they currently yield 8.7% according to Seeking Alpha. Fortitude Gold Corporation, ticker FTCO, is a small mining company that trades in the over-the-counter markets in the US. Having been founded in 2020, Fortitude Gold Corporation focuses on exploring gold and silver projects. Its principal property is the Isabella Pearl Mine Project, covering an area of 9,777 acres located in Mineral County, Nevada. They like to focus on projects with low operating costs and strong returns on capital and high margins. Their website also states that their main strategy is to grow organically, remain debt-free, and distribute substantial dividends. Their current stock offers a dividend yield of 9.1% according to Seeking Alpha, and they pay a monthly dividend of 4 cents per share, which was just increased about a year ago. Because they're such a new company, their stock is very thinly traded, so I'd bear that in mind if you're interested. These over-the-counter stocks are typically regarded as riskier than average because of this, but it could be a good way to get in on gold if you're bullish on that sector and you want a solid dividend. Gladstone Investment Corporation, ticker GAIN, is a business development company that's focused on acquiring mature, lower middle market companies with EBITDAs between $4 and $15 million, attractive fundamentals, and strong management teams. Investing alongside both management teams and independent sponsors, GAIN typically provides most, if not all, of the equity and debt capital required to close a transaction. This is going to be just one of 4 Gladstone companies we're going to look at, and all of them pay monthly dividends. Gladstone Investment invests in companies in the manufacturing, consumer products, and business service sectors. This is definitely a much smaller BDC when compared to others like Ares Capital or FSKKR. Right now, their stock pays 8 cents per share per month, which gives them about a 7% dividend yield. Up next, we have Gladstone Capital, ticker symbol GLAD. Gladstone Capital is also a business development company that's owned by Gladstone. If you're wondering what the difference is between the two, Gladstone Capital provides financing services for lower middle market companies, whereas the previous company we looked at, Gladstone Investment, actually acquires an ownership stake in the company. So one company provides loans and the other becomes an owner in the company. Their investment portfolio is pretty well diversified across many different sectors, including transportation, aerospace, automobiles, telecommunications, and more, which is important for a BDC. It typically offers a yield of around 7% as well and pays a monthly dividend of 8 cents per share. And then we've got Gladstone Commercial Corporation, ticker GOOD, which is a real estate investment trust that invests in single-tenant and anchored multi-tenant net leased industrial and office properties across the United States. Gladstone Commercial targets primary and secondary growth markets that possess favorable economic growth trends, diversified industries, growing populations, and strong employment. As of September 30th of this year, they're well diversified across tenants, industries, and geographies. Gladstone Commercial owns a diversified portfolio of 135 industrial and office properties that are located in 27 states, and they're leased to 107 tenants. According to their website, they've grown their real estate portfolio at a rate of 18% per year since their IPO in 2003. US Global Investors Incorporated, ticker symbol GROW, serves as an investment advisor and an investment manager. They offer a range of different mutual funds and ETFs to investors specializing in emerging markets and natural resources. To quote their website, "At US Global Investors, our mission is to make people feel financially happy and secure that their wealth is consistently growing. We aim to provide a wide array of investment options in the mutual fund and exchange-traded fund space with opportunities to fund your financial goals affordably through our ABC investment plan." They only have a market cap of $33 million. It's kind of surprising to see such a small penny stock pay a monthly dividend, but they do, and they have since 2007. They currently offer a dividend yield of about 3.79%. Granite Real Estate Investment Trust, ticker GRP, is a Canadian REIT that engages in the acquisition, development, ownership, management of logistics, warehouse, and industrial properties in North America and Europe. Their portfolio consists of 143 investment properties that represent 63.3 million square feet of leasable area. They have real estate in 5 countries and have an occupancy rating of 94.7%. They have some pretty high-quality tenants including DHL, Walmart, and Amazon. This company made the switch to monthly dividends back in 2015 and have a pretty good track record of growth. It's not a growth machine, but it's done pretty well over time. The next company on this list is Global Water Resources, ticker symbol GWRS. This is a water resource management company that owns, operates, and manages regulated water, wastewater, and recycled water utilities primarily through metropolitan Phoenix, Arizona. As of their last reporting, they serve approximately 27,630 homes. And as someone who's familiar with the Phoenix metro area, I can tell you that water availability is something that's always being discussed here. This is another company that stands out on this list as there aren't any other water utility companies that pay monthly dividends. Right now their stock offers a dividend yield of 2.27%, which isn't great, but they have been slowly increasing their dividends over the years, and their share price has been a better performer than most companies on this list. Hugoton Royalty Trust, ticker symbol HGTXU, is a Dallas-based royalty trust. They hold 80% net profit interest in various natural gas-producing working interest properties in Kansas, Oklahoma, and Wyoming. This royalty trust was created on December 1, 1998, when XTO Energy Incorporated transported 80% net profit interest in certain predominantly gas-producing properties. Although this company does have a monthly dividend payout program, they haven't paid a monthly dividend in over 2 years. To put it bluntly, this company hasn't been delivering great profits from their operations. Today it's now a penny stock and they trade in the over-the-counter markets and not on any major exchange. H&R Real Estate Investment Trust, ticker HRUFF, is one of Canada's largest real estate investment trusts, with total assets of over $10 billion. H&R REIT has ownership interests in a North American portfolio comprised of high-quality residential, industrial, office, and retail properties comprising of over 26.9 million square feet. H&R's strategy is to create a simplified, growth-oriented business that's focused on residential and industrial properties in order to create substantial long-term value for unit holders. According to their website, 47% of their properties are classified as residential, 19% are industrial, 19% are offices, and 15% are retail. Horizon Technology Finance, ticker HRZN, is a business development company specializing in lending and investing in development stage investments. It focuses on making secure debt and venture lending investments to venture capital-backed companies in the technology, life sciences, healthcare information and services, clean tech, and sustainability industries. They prefer to invest in companies in the US. They're in a pretty similar business as Hercules Capital, Trinity Capital, and those sorts of BDCs. They paid monthly dividends since 2012, and they've gone through periods of growing their dividends and shrinking them. They've been struggling a bit recently, and their payout is close to exceeding their earnings, so we'll have to wait and see if they can survive without a dividend cut. Itaú Unibanco Holding is a Brazilian bank company whose stock trades on the New York Stock Exchange under the ticker symbol ITUB. Itaú provides a range of financial products and services in Brazil and internationally, which includes deposit products, credit cards, investment banking services, leasing, and foreign exchange services. They have a presence in 16 countries and have major offices in Sao Paulo, New York City, Dubai, London, Tokyo, among many others. Their stock currently offers a 4.22% dividend yield, and it has a rather unusual dividend distribution schedule. They pay both a quarterly and a monthly dividend, but their quarterly dividend is their optional special dividend. The KEG Royalties, ticker KRIUF, operates as an unincorporated, open-ended limited purpose trust. It invests in the KEG Rights Limited Partnership that owns the trademark, trade names, operating procedures, and systems and the other intellectual property used in connection with the operation and franchising of the KEG Steakhouse restaurants. The KEG is a franchise of steakhouses and bars that are located throughout Canada and the US. The company was founded in 2002 and they're headquartered in Richmond, Canada. According to their website, they have over 150 steakhouses located throughout the US and Canada, and they're typically in the higher end kind of locations. They're one of only a few restaurants on this list that pay monthly dividends, and they're all located in Canada. Gladstone Land Corporation, ticker LAND, is the last Gladstone company on this list. They're a real estate investment trust that acquires farmland throughout the US. According to their website, it says, Our goal is to build the premier farmland real estate company focused on the ownership of high-quality farms and farm-related properties that are leased on a triple net basis to tenants with a strong operating history and deep farming resources. All of our farms have an abundant water source and are currently 100% occupied. They're currently one of only 2 farm REITs that exist, with the other being Farmland Partners, ticker FPI. Gladstone Land currently owns 168 farms with approximately 112,000 total acres in 15 states and nearly 54,000 acre-feet of water assets in California. It's definitely a company that stands out on this list, but it's an extremely slow grower. Their dividends are increased every year, but only by a fraction of a penny. LTC Properties, ticker LTC, is a REIT that invests in senior housing and healthcare properties, primarily through sale-leasebacks, mortgage financing, joint ventures, and structured finance solutions. This would include preferred equity, bridge, mezzanine, and unitranche lending. Their portfolio is comprised of approximately 50% senior housing and 50% skilled nursing properties, so almost exactly even. They currently have properties in 25 US states and they work with 29 different operators. As of September 30th of this year, they're invested in 191 different properties. These kinds of companies could benefit more as the US sees an influx of older Americans who are in need of their services. LTC pays a monthly dividend since 2005 and they offer a 6% dividend yield. Sienna Senior Living, ticker LWSCF, happens to be another company that owns senior assisted living facilities. However, it does not appear that this company is a REIT, but just a regular healthcare company. They offer independent supportive and assisted living, memory care, and long-term care services and management services to senior living residencies. This company was formerly known as Leisure World Senior Care Corporation, and they changed their name in 2015. As of September 30th of 2024, this company owned and operated 82 senior living residencies in addition to managing 12 residencies for the third parties. Their portfolio includes locations across British Columbia, Ontario, Saskatchewan, and Alberta. In total, they own over 11,000 beds across all their properties. Main Street Capital, ticker MAIN, is a business development company that provides one-stop capital solutions, which include private debt and private equity capital to lower middle-market companies and debt capital to middle-market companies. Main Street's portfolio investments are typically made to support management buyouts, reconciliations, growth financing, refinancing, and the acquisitions of companies that operate in diverse industry sectors. As of the making of this video, they have investments in 193 companies and they have $8 billion in capital under management. Main Street Capital has been a very successful BDC that's offered long-term share price and dividend growth. They're one of my all-time favorite companies that I love to buy whenever their stock is on sale. It's the lowest yielding BDC in the sector at a little under 5.5%, but the growth I said has been excellent. Modiv Industrial, ticker MDV, is an internally managed REIT that's focused on single-tenant net leased industrial manufacturing real estate. The company actively acquires critical industrial manufacturing properties with long-term leases to tenants that fuel the national economy and strengthen the nation's supply chains. It's a very small REIT that only owns 43 properties in 15 states, and they own a combined 4.5 million square footage. According to their very ugly website, it says they have $600 million in gross real estate value and a weighted average lease term of 13.8 years, which is pretty good. They might be the newest monthly paying dividend stock on this list as they've only been around for about 2 years. It is somewhat thinly traded, but it offers a dividend yield of over 7%. Flagship Communities Real Estate Investment Trust, ticker MHCUF, is a REIT that's been formed to own and operate a portfolio of income-producing manufactured housing communities. These communities are located in Kentucky, Indiana, Ohio, Tennessee, Arkansas, Missouri, and Illinois. Their portfolio also includes a fleet of manufactured homes for lease to residents of such housing communities. According to their website, they own and operate 81 total communities, which comprise of 15,066 lots. They're also a pretty new company, having been launched in 2021. It trades in the over-the-counter markets given its size, and it's been paying monthly dividends since their IPO. Mullen Group, ticker MLLGF, provides a range of trucking and logistical services in Canada and the US. The less-than-truckload segment delivers general freight consisting of smaller shipments, packages, and parcels, and pharmaceutical and packaging products. The logistics and warehousing segment offers full truckload, specialized transportation, warehousing, and fulfillment centers that handle e-commerce transaction and transload facilities for international and bulk shipments. Their specialized and industrial services segment provides specialized equipment and services to the oil and natural gas, environmental, construction, and pipeline groups. Mesa Royalty Trust, ticker MTR, owns overriding royalty interests in various oil and gas-producing properties in the U.S. It holds interest in properties that are located in the Hugoton Field of Kansas and the San Juan Basin Field of northwestern New Mexico and southwestern Colorado. The company was founded in 1979 and they're based out of Houston, Texas. The stock is yet another example of a royalty trust, and they haven't paid a monthly dividend in 6 months, but normally they do during more profitable periods. With these royalty trusts, it can be really hard to talk about them because they don't provide much information on their website. For example, with Mesa Royalty Trust, you can only receive some documents by writing a handwritten letter to their mailing address, so I don't have much else to talk about with this company. Northland Power, ticker NPIFF, is a Toronto-based independent power producer that develops, builds, owns, and operates clean and green power projects. Their projects are located all over the world, including Canada, the Netherlands, Germany, Spain, and Colombia. The company produces electricity from renewable sources such as wind and solar, as well as natural gas for sale under the power purchase agreements and other revenue arrangements. It owns or has an economic interest in 3.4 gigawatts of operating generating capacity. They were founded in 1987, and today they employ over 1,100 people. Some of their projects would include onshore and offshore wind farms, solar fields, and storage facilities. Northwest Healthcare Properties Real Estate Investment Trust, ticker NWHUF, is a healthcare REIT. According to their website, of the world's leading specialized investors, managers, and developers of healthcare real estate, Northwest delivers solutions tailored to the distinct needs of our healthcare operator tenants in 8 high-growth and resilient countries. We have a proven track record of partnering with our tenants to facilitate maximizing their performance. Their portfolio consists of 186 properties, which are made up of 61% hospitals and healthcare facilities, 38% medical offices, and 1% life science and education. Realty Income, ticker O, is one of the largest REITs in the world. Having been founded in 1969, they invest in diversified commercial real estate and have a portfolio of over 15,450 properties in all 50 states, the UK, and 6 other countries in Europe. They've also been known for many years as the Monthly Dividend Company. Since their founding, they've declared 654 consecutive monthly dividends, and they're a member of the S&P 500 Dividend Aristocrats Index. They've increased their dividend for the last 30 consecutive years and counting. You can see on their website they have a compound annual total return of 14.1% since their NYSE listing, and they've grown their dividend every quarter for 109 quarters. They're currently invested in 90 different industries, and they have 1,552 clients and own over 337 million square feet of real estate. Orchid Island Capital, ticker ORC, is a company that you'd swear is competing with ARMOR Residential to be the worst. This specialty finance circus invests in residential mortgage-backed securities in the U.S. Their RMBSs are backed by single-family residential mortgage loans, referred to as agency RMBSs. The Pits of Hell opened in 2010 in Vero Beach, Florida, which is where they were founded and where this company is located. You'll be hard-pressed to find a company that sucks as hard as this one does. ARMOR Residential actually beats them when it comes to dividend cuts and share price depreciation. Don't be fooled by this 18% dividend yield that it's currently offering. It's currently at risk of yet another dividend cut. Oxford Square Capital, ticker OXSQ, is a business development company that invests in both public and private companies. It invests in secured and unsecured senior debt, subordinated debt, junior subordinated debt, preferred stock, common stock, and syndicated bank loans. Oxford primarily invests in debt and/or equity securities of technology-related companies that operate in the computer software, internet, and information technology infrastructure sectors. This BDC isn't like most BDCs that exist because they focus on holding CLO investments, which are collateralized loan obligations. CLOs are very high risk because they're just pools of very poorly rated corporate debt. Permian Basin Royalty Trust, ticker symbol PBT, is a royalty trust that holds overriding royalty interests in various oil and gas properties in the United States. They're based out of Dallas, Texas, and they own royalty interests in various properties throughout the state, including Dune, Judkins, McKnight, and Tubb Fields in Crane County, Texas. As I keep mentioning with these, this company is a royalty trust, and the amount of dividends this company pays each month heavily depend on the performance of oil. That's just how these royalty trusts are structured, so they're not going to pay the same amount in dividends every single month. Right now their stock offers a 5.98% dividend yield according to Yahoo Finance, but again it all depends on oil's performance, which can swing from month to month. Somewhat of a newer monthly dividend company is Phillips Edison & Company Incorporated, ticker PECO. This company's been around for more than 30 years, but in 2021 they decided to become a publicly traded REIT on the NASDAQ. Phillips Edison describes themselves as one of the nation's largest owners and operators of grocery-anchored shopping centers. PECO's diversified portfolio of well-occupied neighborhood shopping centers features a mix of national and regional retailers selling necessity-based goods and services. They have this really useful infographic on their website that shows some of their stats. They currently have 290 properties in their portfolio, which they like to refer to as neighborhood centers. Their occupancy rating is 97.8%, and they have real estate in 31 states. As of Q3 2024, they've experienced core FFO per share growth of 9.6%. Pito Exploration and Development Corporation, ticker PEYUF, is an energy company that engages in the exploration, development, and production of natural gas, oil, and natural gas liquids. All of their production takes place in the Deep Basin in Alberta, Canada. The company was named after Wild Bill Pito, one of the first national park rangers in Canada, and their website has a little information on the man. They've been around for 26 years, and today they're the 5th largest Canadian gas producer. Their dividends have varied, just like a number of energy companies we've looked at so far. These kinds of dividends are going to vary a lot on energy prices. Up next, we have PennantPark Floating Rate Capital, ticker PFLT. PennantPark is a business development company that seeks to make secondary direct, debt, equity, and loan investments. They only invest through floating rate loans in private or thinly traded small market cap public middle market companies. PennantPark also invests in equity securities including preferred stock, common stock, warrants, or options received in connection with debt investments. According to their website, it says they provide funding to companies with a proven management team, competitive market positions, strong cash flow, growth potential, and viable exit strategies. Overall, this BDC hasn't been too spectacular in terms of growth. Its share price has remained mostly flat over the years, but they've never had a dividend cut. Pinecliff Energy, ticker PIFYF, engages in the acquisition, exploration, development, and production of natural gas and crude oil. Their operations take place in the Western Canadian Sedimentary Basin. The company primarily holds interest in oil and gas properties in the Viking and Ghost Pine area of central Alberta. Roughly 79% of what they produce is natural gas according to their website. They're a company that's grown from 100 barrels of oil equivalent per day in 2012 to 23,500 barrels per day now. They also have a higher than average insider ownership percentage at over 10%. Primaris REIT, ticker PMREF, is another Canadian REIT that trades in the over-the-counter markets in the US. Primaris is Canada's only enclosed shopping center-focused REIT with ownership interests primarily in the leading enclosed shopping centers in growing mid-sized markets. Their portfolio totals 38 properties or 13.4 million square feet valued at approximately $4.1 billion. According to their website, since 2003, the company has built a lending asset and property management platform consisting of over 350 professionals working across Canada. Their occupancy is currently at 94.8% and they're BBB rated. Choice Properties Real Estate Investment Trust, PPRQF, is another Canadian REIT. According to their description, it says, "We are more than a national owner, operator, and developer of high-quality commercial and residential real estate. We believe in creating spaces that enhance how our tenants and communities come together to work, live, and connect. We are focused on maintaining our market-leading portfolio, sustaining operational excellence, and delivering our transformed development pipeline." They have over 700 pieces of real estate, which are comprised of 77% retail, 19% industrial, and 4% mixed-use and residential. Paramount Resources, ticker PRMRF, explores and develops conventional and unconventional petroleum and natural gas reserves. Paramount's oil and gas properties are located primarily in Alberta and British Columbia. The company's ongoing exploration, development, and production activities are intended to discover new reserves and increase the productive capability of existing fields. They then extract, process, and sell the company's natural gas, NGLs, and oil economically and safely. They were founded in 1976, and they have what's likely the highest insider ownership percentage I've ever seen. Roughly 46% of all outstanding shares are owned by company insiders, so they're obviously going to manage things to their best interests. Permrock Royalty Trust, ticker PRT, is another Texas-based royalty trust that owns 80% net profit interest in the oil and natural gas production properties in the Permian Basin located in Texas. Their properties comprised of 22,997 net acres, which includes 2,434 net acres in Hockley and Terry counties. They also have 1,667 net acres in Terry and Cochin counties, 14,727 net acres in Glasscock, Stonewall, and Cole counties, and 4,169 net acres in Ward, Crane, Terry, and Ector counties. Just like with every other royalty trust that we've looked at, the amount of dividends you can expect to receive all depend on the performance of oil. Prospect Capital Corporation, ticker symbol PSEC, is a business development company that specializes in middle market, mature, mezzanine finance, late stage, emerging growth, leveraged buyouts, refinancing, among several other financial services. They invest in several different sectors, including aerospace and defense, chemicals, conglomerate services, consumer services, retail, software, among many others. This company has come under a lot of criticism over the past year, with a number of hit pieces coming out against them. They've been heavily criticized for their poor performance and their reliance on payment in kind to stay afloat. This company just went through another dividend cut last month. Permianville Royalty Trust, ticker symbol PVL, can officially be considered a monthly dividend stock again after they suspended their dividend a while ago. They just recently paid a dividend again last month, but again, it's another royalty trust, so we'll have to wait and see how long they can pay a dividend. They own net profit interest, representing the right to receive 80% of the net profits from the sale of oil and natural gas production from properties located in Texas, Louisiana, and New Mexico. Pizza Pizza Royalty Corporation, ticker PZRIF, owns and franchises quick service restaurants under the Pizza Pizza and Pizza 73 brands in Canada. According to the information in the DOE section of their website, Pizza Pizza has 469 traditional and 207 non-traditional locations, and Pizza 73 has 102 locations throughout Canada. Like some of the other companies we've looked at, Pizza Pizza suffered a lot during the pandemic, and this royalty trust went through a sizable dividend cut in 2020. But you can see over the long term, they've had a really solid track record of growth, and it's now larger than it's ever been. Their stock currently yields over 6% as of the making of this video. Ryokan REIT, ticker RIOCF, is a REIT that owns, manages, and develops retail-focused properties. Increasingly, they've been focused on mixed-use properties located in prime, high-density, transit-oriented areas where Canadians want to shop, live, and work, at least according to their website. In their most recent investor presentation, they have 186 properties with 33 million square feet of aggregate net leasable area. Their occupancy is currently at 97.8%, which is pretty good for a retail REIT, and 58.1% being grocery-anchored centers and 31.6% being mixed-use. Richards Packaging, ticker RPKIF, designs, manufactures, and distributes packaging containers and healthcare supplies and products in North America. They offer paper, glass, metal, and plastic containers and closures. This company also provides packaging design and development, sourcing capabilities, and logistical management services. It serves food and beverage, cosmetics, healthcare, industrial, and pharmaceutical sectors. They're likely the oldest company on this list, having been founded in 1912, and they're based out of Ontario. Sabine Royalty Trust, ticker SBR, holds royalty and mineral interests in various producing oil and gas properties in the United States. Its royalty and mineral interests include landowners' royalties, overriding royalty interests, minerals, production payments, and other similar non-participatory interest oil and gas properties which are located in Florida, Louisiana, Mississippi, New Mexico, Oklahoma, and Texas. As I keep mentioning, because Sabine is a royalty trust, the amount of dividends that it pays will vary greatly from month to month, and it all depends on the performance of oil. Their dividends have been trending downward, but right now they offer a yield exceeding 5%. Stellus Capital Investment Corporation, ticker SCM, is a business development company specializing in investments in private middle market companies. It invests through first lien, second lien, unitranche, and mezzanine debt financing, often with a corresponding equity investment. The fund prefers to invest in companies located in the US and Canada. The company seeks to invest in businesses with an EBITDA between $5 million and $50 million. They're an externally managed BDC that's owned by Stellus Capital Management. According to their website, they have over 80 active investments in $2.9 billion worth of assets under management. 98% of their investments are in first lien debt, and almost everything they hold is floating rate debt. Savaria Corporation, ticker SISXF, provides accessibility solutions for the elderly and physically challenged people in Canada, the US, Europe, as well as other international companies. They operate in two segments, which are accessibility and patient care. The accessibility segment designs, manufactures, distributes, and installs a portfolio of accessibility products. This includes commercial and home elevators, stair lifts, platform lifts, and wheelchair lower floor accessible conversions for selected brands of minivans, personal, or commercial applications. According to the information on Seeking Alpha, their stock has been paying monthly dividends for a few years and it yields 2.55%. San Juan Basin Royalty Trust, ticker SJT, is another royalty trust based out of Texas. This company has 75% net overriding royalty interest in Southland's oil and natural gas interests in properties located in the San Juan Basins in northwestern New Mexico. Again, just like every other royalty trust that we've looked at so far, the dividends vary from month to month, and there can be periods where they don't even issue any dividends at all. It 100% depends on the performance of oil. Things were looking a lot better for this company about 2 years ago from a dividend perspective, but things have since cooled off. SL Green Realty Corporation, ticker SLG, is Manhattan's largest office landlord. As of September 30th of this year, SL Green held interest in 55 buildings totaling 31.8 million square feet. This includes ownership interests in 28.1 million square feet of Manhattan buildings and 2.8 million square feet securing debt and preferred equity investments. They own a couple really famous properties, including One Vanderbilt, which is one of the city's newer skyscrapers. SL Green started paying monthly dividends back in 2020, and today their stock pays a little under 26 cents per share per month. SLG suffered significantly during the pandemic, but a lot of improvements have been made in the last year. New York City office sales are up 44% year over year, indicating demand for Manhattan office space is returning. They had to cut their dividend twice following the lockdowns, but they did increase it less than a month ago. Whitecap Resources Incorporated, ticker SPGYG, is an oil and gas company focused on the acquisition, development, and production of petroleum and natural gas assets in Western Canada. The company's primary area of focus of development programs are in northern Alberta, British Columbia, central Alberta, and Saskatchewan. This company was founded in 2009 and they're headquartered in Calgary. Today they have a market cap of over $6 billion and an enterprise value of $7.3 billion. They're reporting a compound annual growth rate of 12% in their funds flow, 11% in terms of production, and 13% in their total proven plus probable reserves. Slate Grocery REIT, ticker SRRTF, is a Canadian company that exclusively owns American properties. As the name would imply, they're an owner and operator of U.S. grocery-anchored real estate. This REIT owns and operates approximately $2.4 billion of critical real estate infrastructure across major U.S. metro markets. This would include places like Florida, Georgia, New York, and Texas, to name a few. As of their most recent quarter, they own 116 properties across the US and over 23 million square feet of real estate. They've been paying monthly dividends since 2014, and they've been able to grow them a bit. They partner with a lot of recognizable brands including Walmart, Aldi, and Albertsons, to name a few. Stag Industrial, ticker STAG, is a REIT that focuses on the acquisition, ownership, and operation of industrial properties throughout the U.S. Since 2011, this company is focused on properties that include distribution centers, warehouses, and logistical centers. As of their most recent quarter, this company reported having 578 properties across 40 different states. They have an enterprise value of over $10 billion, and they own 114 million square feet of real estate. The stock has grown their dividend every year since their IPO, which was one thing that really appealed to me many years ago when I bought it. I've since sold it because it is a very slow grower. You can see they typically increase their distributions by less than a penny each year. But if you like a sturdy monthly dividend, then it is appealing from that perspective. Timber Creek Financial Corporation, ticker TBCRF, is a Canadian company that provides short-term financing solutions to commercial real estate investors. According to their website, they describe themselves as one of Canada's leading alternative asset class investment managers, focused on providing structured financing solutions to experienced real estate owners and investors. They currently have 92 mortgage investments with an average size of $15.3 million. 94.1% of their investments are in urban markets, with 60% being residential multifamily properties. They paid monthly dividends since 2016, and according to Seeking Alpha, they currently yield over 9%. Tamarack Valley Energy, ticker TNEYF, acquires, develops, and produces crude oil, natural gas, and natural gas liquids in the Western Canadian Sedimentary Basin. Their asset portfolio is comprised of oil plays in Alberta, including Clearwater, Charlie Lake, and several enhanced oil recovery opportunities. They claim their strategic direction is guided by three key principles. First is the targeting of repeatable and predictable plays that provide high free funds flow generation potential with long life reserves. Second is the application of their rigorous, proven model process to carefully manage risk and identify opportunities. Then thirdly, operating as a responsible corporate citizen with a focus on environmental, social, and governance commitments and goals. Whitestone REIT, ticker WSR, acquires, owns, and operates and develops open-air retail centers. They focus specifically on properties in some of the fastest-growing markets, which include Phoenix, Austin, Dallas-Fort Worth, Houston, and San Antonio. They describe their properties as communities because they own mixed-use properties that combine retail, restaurants, and service-oriented business under the same roof. It's a pretty small REIT consisting of only 55 properties with 1,466 tenants. They have an occupancy rating of 94.1%, which is right around average for this kind of REIT. They took a massive hit during the pandemic from a share price and dividend perspective. Today their share price has fully recovered, but their dividend is still less than half of what it used to be. And that's going to conclude our look at every single monthly dividend-paying stock. No fancy outro here. Thanks so much for watching, and please give it a thumbs up if you found this video useful. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher-yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.